Welcome back to another explainer. Today we're throwing on our investment analyst hats and going value hunting in the Latin American fintech space. We're putting Brazilian powerhouse PagSeguro right under the microscope. We'll be breaking down their latest financials, digging into what Wall Street's predicting, and of course, seeing how they stack up against their fiercest rival.
Okay, let's just jump right in with an absolutely massive number, 41.4%. That is the median upside currently projected by Wall Street analysts for this stock. I mean, when you see a projection like that for a multi-billion-dollar company, it literally demands your attention right out of the gate. But as any disciplined investor knows, we can't just blindly trust the consensus, right? We need to pop the hood and look at the actual economic engine driving this growth.
So, here's our roadmap for today. We'll meet Brazil's fintech giant, run through their Q1 2026 financial highlights, check out those Wall Street price forecasts, host a PagSeguro versus StoneCo showdown, and finish up with a big takeaway. Part 1. Meet Brazil's fintech giant. All right, operating mostly under the PagBank brand, these guys are on a serious mission to disrupt and democratize financial services. And why does that matter to us? Well, historically, Brazil has been this highly concentrated market with just absolutely punishing interest rates. By bringing everyday consumers into a slick, mobile-first digital ecosystem, PagSeguro isn't just offering a standard service. They're actually building a massive economic moat with incredibly high switching costs.
And this really illustrates how they are way more than just a payment processor these days. They actually boast a 7-pillar business model that functions as a total end-to-end digital banking ecosystem. We're talking everything from a digital platform integrating payments and software, an acquiring network, issuing cards, multiple bank accounts and investment platform, insurance distribution, all the way to a super app for telecom and delivery. Basically, from processing payments for micro merchants to offering full-blown investment platforms, they've created a deeply sticky ecosystem for their nearly 34 million clients.
Part 2. Q1 2026 financial highlights. So let's move over to the data and see how this business model actually performed in the first quarter of 2026. Because, let's face it, a great story always needs solid numbers to back it up. Notice that incredible surge in total deposits right there on the bottom row. It shot up nearly 23% year over year, hitting 41.6 billion reais. For an analyst, this is basically the holy grail. A growing deposit base gives them incredibly cheap funding, which totally insulates them from those high central bank rates and help drive a steady non-GAAP net income of 575 million reais. And while total payment volume dipped just a tiny bit, their return on average equity actually expanded to 15.8%. Here's the really crucial point. Even with high interest rates putting a massive squeeze on the broader financial sector, PagSeguro's credit portfolio expanded by a whopping 36%, reaching 5 billion reais. They are pulling off what is arguably the hardest trick in all of fintech, successfully monetizing their ecosystem by converting simple payment clients into highly profitable credit customers. Part 3. Wall Street price forecasts. With those solid current financials established, what does the market actually think this company is worth right now? Looking at 15 Wall Street analyst ratings, the consensus is definitely divided, though it leans a bit bullish. The street is split right down the middle, with 7 buys, 7 holds, and just 1 single sell rating. It's your classic battleground stock, where the whole market is actively debating its future multiple. With the current share price sitting around $8.55, that median target of $12.09 is what gives us that spicy 41.4% upside we talked about earlier. But let's look at this through Benjamin Graham's margin of safety lens for a second. Even the absolute most bearish target on the street is $7.33, which is only about a 14% drop from current levels. Meanwhile, the high target is aiming for $14.08, a nearly 65% gain. That highly asymmetric risk-reward profile provides a really fascinating margin of safety for value hunters. Part 4. PagSeguro versus StoneCo showdown. Of course, no stock exists in a vacuum. To truly understand PagSeguro's valuation, we absolutely have to put it head-to-head with its biggest competitor in the market, StoneCo. Let's lay out the fundamental differences first. Both of these guys sit around a $2.4 to $2.7 billion market cap, but they are entirely different beasts. If we apply a Peter Lynch categorization here, PagSeguro is the legacy stalwart, right? Founded in 2006 and anchored by its heavy banking focus, making up about 92% payments and 8% banking. StoneCo, on the other hand, founded 6 years later, is the fast grower that leans heavily into software and enterprise resource planning, especially after their Lynx acquisition, making them 85% payments and 15% software. This side-by-side financial shootout is just fascinating. Check this out. PagSeguro handles more trailing 12-month total payment volume, 354 billion reais compared to StoneCo's 328 billion, and it trades at a remarkably cheap enterprise value to forward gross profit multiple of just 1.25. But StoneCo boasts significantly higher overall gross margins, 74% compared to PagSeguro's 51%, and slightly faster revenue growth at 59% versus 55%. It's a classic investment trade-off, right? PagSeguro gives you the cheaper valuation, while StoneCo offers that higher margin growth.
Part 5. The big takeaway.
So let's bring all of this data together into a final synthesis. What does all this actually mean for us as investors trying to navigate this space? Well, as independent analysts like Beat the Denominator have pointed out, quote, these companies are trading so much in line. They are both dirt cheap, hypergrowth stocks, end quote. They really are trading remarkably in line with each other. They're both highly profitable, growing super quickly, and trading at just incredibly dirt cheap multiples. Ultimately, your strategic preference dictates the play here. Do you prefer PagSeguro's massive deposit-driven banking moat, or are you more drawn to StoneCo's higher-margin software trajectory? With nearly 34 million clients, surging deposit-driven earnings, and a projected 41% median upside, PagSeguro clearly has the fundamentals of a financial powerhouse. But the final question for your portfolio is this. In the wildly volatile landscape of Latin American fintech, is PagSeguro a deeply undervalued stalwart just waiting for a massive correction upward, or is it a value trap stuck in a high-interest rate regime? Well, that is for you to decide. Thanks so much for joining me on this explainer, and we'll catch you in the next one.